What's up, everybody? Today is July 15th, and today, this year in 2020, that means it is tax day. Taxes are officially due. So today I'm going to myth bust one of the most common misunderstood things about the United States tax brackets. But before we jump into the myth busting, I just want to give a public service announcement. If you have not filed your taxes yet, you should do that today, or you should file an extension so that you do not miss the tax deadline and have the IRS knocking on your door, because that is the last thing that you want, is to have the IRS coming and hunting you down. You can extend your tax date till October 15th, but you will still need to make an estimated payment today, so you better get a check in the mail if you have not done so already, if you think you will end up owing taxes. If you want to get better in personal finance, investing, entrepreneurship, or just learn general business things like stock market and financial world, please consider subscribing. Let's get back to this myth busting of a tax bracket. The biggest thing that I have seen misunderstanding of a tax bracket. Let's jump right in. If you've talked to anybody about taxes, you most likely have heard somebody say, I don't want to make more money because it'll put me in a higher tax bracket, and then I'll end up having to pay way more in taxes, and I'll actually have less money left over. I'm a CPA, and I know I have people who tell me this a lot. So let's break it down. Is that statement true? If you make more money, will it put you in a higher tax bracket, resulting in you taking home less money at the end of the day? I could give you the short answer and save you from watching the rest of this video, and you know what? I'm a nice guy, so I'm going to do it. No. The answer is no. Making more money and putting yourself in a higher tax bracket does not result in you taking home less money than if you hadn't made the extra money to put you in a higher tax bracket. And I'm going to break down and tell you why right now. So congratulations if you've made it to now. You didn't just click away and find your answer. You are so curious about the IRS tax brackets in the United States that you thought to yourself, yes, I'm going to listen to Greg spout off about random tax things. So you're awesome. Keep up the good work. So it is true that if you make more money, you can get placed into a higher tax bracket, but you will not go home with less money overall. Wait. You're probably thinking to yourself, Greg, I can do math, and I know if I get taxed at a higher rate, then more money of mine is being sent to the federal government, and that just doesn't add up. That means I will go home with less money. And that would be true if you jumping into a higher tax bracket resulted in that tax rate being spread out over all of your income. But there's this wonderful thing, this magical word called marginal tax brackets. So that just means you're taxed at the higher rate on the margin. So whatever is above a certain threshold, income threshold, only the amount above that gets taxed at the higher rate. So you can think of it as stairs. You know, the first step, if you're an individual in the United States, that first step, $0 to $9,700, that first step is taxed at 10%. Now the next step is going to be from $9,700 up to just about $40,000. That second step is taxed at 12%. While the first step is still only taxed at 10%, the next step, that income above that margin, above $9,700 up to $40,000, is only taxed at 12%. And the third step, around $40,000 up to $83,000, is taxed at 22%, while your first $9,700 is at 10%, your next up to 40 is at 12%, and then your next after that up to 83 is at 22%. So just because if you find yourself making above $40,000 and you're standing on step 3, it does not mean that your entire income is taxed at 22%. A portion is taxed at 10, a portion is taxed at 12, and then whatever is above that income threshold will be taxed at that new rate. So if you find yourself in that category of saying, man, I would really like to make an extra $1,000, but that's going to throw me in a higher tax bracket, and I'm going to lose that whole extra $1,000 because my tax rate's going to be higher, and I'm going to go home with less money. You need to stop that thinking. It's incorrect. It's false. No matter what, if you make more money, even if it puts you in a higher tax bracket, you're still going to go home with more money because only the portion that is above the previous threshold is going to be taxed at the higher rate. More income is always a good thing, even if it's taxed at a higher rate. Now, that being said, I would not be a good public accountant. I wouldn't be a good CPA if I did not say, by all means, and I mean all means, find every legal way to decrease your tax liability. It is a good thing. I am all for paying the least amount of taxes as possible. Just don't trick yourself into thinking that it's bad to earn more income because you're going to lose money to taxes. Well, it's always better to make more income. That's how it is. But find every way possible to lower your tax burden. So consider this myth busted. You will not go home with less money if you end up making more income that jumps you into a higher tax bracket. You're not going to go home with less money than if you didn't make that income. Myth busted. Subscribe. Catch you guys next time.